Good morning, everyone. Welcome to this session about the setup and carried forward of classes, advanced tax planning and tax relief. Here I am, Sumiranjan Sahu, Assistant Professor in Department of Commerce, Odisha State Open University. Now I am going to discuss about your course code 104 Corporate Taxation Unit 4, that is setup and carried forward of losses and advanced tax planning and tax relief. After this study, you will able to understand the provision of setup and carry forward losses, basic rule for setup and carry forward losses, and advanced tax payment and tax relief. And you also know about who is eligible to require to pay the advance tax payment. So now we are moving to the introduction part of setup and carry forward losses. In our business, we may face the adverse situation, that is losses. At that time, we will set up these losses against our profit. But there is certain rules which are provided by the Income Tax Act 1961. So, in case of current year, if any losses arise, at that time we will set up the losses against the profit. But if it is not adequate amount of profit to set up these losses, then these losses will be carried forward to the next year. That is called carried forward of losses. So first one is set up losses. There is two types of set up losses. First one is intra-head setup and another is inter-head setup. In case of intra-head, we will set up our losses in the same head of income. It means when a person may run a business A and at that time he makes some losses, but this person will also make simultaneously another business, that is business B, and he makes some profit at that business B. At that time he will set up the losses of A against the profit of business B. That is called intra-head setup. But if we are coming to the inter-head setup, at that time we will set up our losses against the profit of another head, not only the same head but also the another head. For example, if a person or a business run a house property and also run a business A, at that time he will make some loss at the time of house property and he is eligible to set up the losses against the profit of a business. That is called inter-head setup, and in this case we will adjust our losses of house property against the profit of another head, that is business. That is called inter-head setup. But there is some exception. For example, speculative losses can only be set up in speculative business profit. Then long-term capital losses can only be set up against the long-term losses. Then we are coming to the carried forward of losses. As I have told you that set up losses means we will set up our losses against the profit in same financial year. What carried forward means, if the profit is not sufficient to set up this current year losses, then the losses will be carried forward to the next period. That is called carried forward of losses. But there is different rules applied to different types of losses. Here I am going to discuss about this house property loss. In case of house property, we can only carry forward the losses for 8 years and it is set up against the house property income. Then we are coming to the business loss, which is comes under non-speculative business. Here we can also carry forward our losses for only 8 years and set up against only business income. Then speculative business loss. In case of speculative business loss, we will carry forward the losses only for 4 years and it is carried forward only or set up only against the speculative income. Then we are coming to the capital losses. There are two types of capital losses. First one is short-term capital losses and long-term capital losses. In long-term capital losses, it can be set up against the capital gain, but it is carried forward only for the 8 years. Then we are coming to the next slides about the basic rule for setup and carried forward. So, same head setup. Losses can be carried forward only against the same head income head. Then filing tax return. If you are claim for carried forward or losses, at that time we must be file that losses or file the tax return. Then timely filing. Losses can be only be carried forward if tax return is filed by due date, except house property loss. Then no setup against exempted income. It means tax-free income cannot be the adjust losses. Then no setup against the lotteries and winning. Gambling losses cannot be set up against any profit. Then we are coming to the advance tax payment. Advance tax payment means we will pay our tax prepaid way or before the due date. So who needs to pay this advance tax? There is rule according to provision of Income Tax Act 61. The rule is business and individual who carried their business and he will be with tax liability more than the 10,000 in a year is eligible to pay the advance tax. Then there is certain exemption. This exemption is senior citizens who do not have business income are exempted for paying the advance tax. Then payment schedule in India follows in following way. That is 15% by June 15 and 45% by September 15 and 75% by December 15 and 100% must be paid by March 15. This system ensures government gets revenue on time and helps taxpayer avoid penalties. Then we are coming to the tax relief. There is 4 ways to making the tax relief. First one is deduction, second one is exemption, third one is credit, and fourth one is rebate. So deduction is available in income tax section 80C from 80C to 80U, and the taxpayer able to get the maximum tax benefit from that deduction. Then exemption are comes under the section 10 of Income Tax Act 1961. Then there is certain also credit available, direct reduction in tax payable, for example foreign tax credit, etc. Then we are coming to the rebate. Rebate is the refund of excess tax paid amount to the taxpayers. That's all about the poor setup and carried forward of losses, advance tax payment and tax relief. Now we are going to discuss about very brief way, that is carried forward on adjusted losses to be used in future years. Advance tax ensure timely tax payment and avoid penalties. Then tax relief helps individual and business saves on tax. Then setup helps adjust losses against the income. That's all about the setup and carried forward losses. I hope this session will be fruitful to you, and thank you.